Welcome, everybody, to the Orange Wheel podcast, the podcast where we support business leaders in understanding Bitcoin and the monetary transition. I'm joined today by Matt Agee. Did I pronounce that correctly? Is it
Agee? Close enough.
Agee? Okay, apologies. Matt Agee. Matt's the founder of O21 Solutions, and he also has a really interesting and strong background working for large multinational corporations, including Exxon and Amazon Web Services. So Matt and I have had the opportunity to meet a couple times over the phone, given that we're both focused on the intersection of Bitcoin and corporate strategy. So I'm really excited to kind of delve into some of these themes deeper today on this podcast. How are you doing today, Matt?
Yeah, doing great. Thanks for having me on. It's been good to meet you and talk shop with you about Bitcoin and Bitcoin consulting and corporate adoption from your vantage point across the pond and mine here in Houston. So good to be on. Thanks for having me.
So with that, Matt, it'd be great to provide the audience a little bit of a background about your professional experiences before starting O21.
Sure. I've been 20 years in the energy industry. So I spent 16 and a half years at ExxonMobil in a variety of different roles. And then I spent the past 3.5 years at Amazon Web Services, also supporting energy clients. Large enterprises, probably 15 different jobs in that time period. So I've seen everything from IT to operations to the upstream portion of the oil and gas business to the downstream to chemicals, trading, and beyond. Just a broad, vast experience and a lot of kind of leadership experience in that too, helping distill organizational priorities and initiatives down into execution and then being accountable for deliverables. So yeah, now just found my way into the Bitcoin industry and trying my hat at that.
Amazing. No, it's great to see people. I think this wave of adoption, we're sort of seeing those with professional experiences like those who've worked in large multinationals, in in-house strategy, in-house consulting, as well as external consultants, kind of now Bitcoiners who have those professional experiences and then starting new businesses to take those capabilities into the Bitcoin space. I think it's a really exciting place to be and certainly kind of at the forefront of this wave. And I think it's both a valuable contribution to the network, but also one that I think will be quite a successful endeavor as well.
Yeah, so, I think you have some similar backgrounds and experiences. I guess from my vantage point, it was kind of a natural extension into Bitcoin from my background, just because oil and gas, which is predominantly where I spent my time, is long-term focused. There's a lot of long-term orientation. You're dealing in a commodity or multiple commodities. There's a lot of volatility. There's a cyclical aspect to it. So everything was just kind of a natural fit to me. I don't know if you feel the same way.
Yeah, I mean, I hadn't really actually put those pieces together. I think it's an interesting that you bring up those similar aspects of the industries, right? And I think certainly where I think that what we're doing at Orange Wheel, kind of also really focusing on energy companies. I think there's really great synergies both from the kind of balance sheet side, but then also thinking about integrating Bitcoin mining into energy systems. So I think there's a lot of interesting potential synergies within that particular industry.
Absolutely. You're speaking my language.
Super cool. So what's ultimately, when you put together O21, what's the problem that you're trying to address with this company as far as you see it?
The immediate problem is we see a wave of corporate adoption and coming from, I guess you could call them just legacy industries or just existing industries where there are businesses that may want to adopt or are eager to adopt, or I think that they should adopt. They just don't have the foundational background or knowledge in Bitcoin or the network, how it's different than maybe other things that are out there, or mechanically how to adopt it, where to buy it, how to hold it, how to think about tax and accounting and insurance and all these ancillary services that go along with that, practical adoption. And so on this cusp of corporate adoption, our mission is to essentially accelerate corporate adoption and corporate onboarding and making it faster and easier and more streamlined to facilitate that process. And so we can help people think about how to actually integrate it into their operations in addition to holding as a treasury asset, like you mentioned, mining or maybe payments. And so there's different aspects of that they can adopt and integrate. So once they have that plan, then going off and executing and actually bringing forward the execution through being able to facilitate partnerships, for example. Like they may not even know who to go to, who does what service providers are even out there, and of those, which ones are the best fit for them. So that's essentially the first order mission of what we're doing. The second order mission for us is we view Bitcoin as a long-term savings technology and as a thing that companies can hold that gives them additional runway to weather things like currency debasement or fiat currency volatility, and that will be increasingly important going forward. And for me, the energy industry is something that's crucially vital to society in terms of, facilitating the growth of living standards and prosperity and economic growth. And like you said, there's a lot of synergies in the energy industry and Bitcoin, and that the sooner that those companies begin adopting, the greater that they will be able to essentially mitigate the risk of that type of volatility. So that's the second order mission.
Awesome. Yeah, no, that's great. I think the sense I get is, the wave is coming. There is this gradual movement. I think it comes in fits and starts. But maybe just one quick perspective from you, Matt. My view is, because all the attention that the MicroStrategy has gotten and that particular business model, I feel like many business leaders are, when they consider corporate adoption of Bitcoin, they sort of pigeonhole it into this particular business model that Michael Saylor has kind of created in a sense, and that others are sort of replicating. So when they hear the term Bitcoin treasury company or corporate adoption of Bitcoin, they kind of think of that one aspect of it, which in my kind of perspective oversimplifies and reduces the ability for companies to think about other ways to apply it into their business model and their balance sheet. Do you see things similarly right now, or what are the discussions you're having with prospects and clients? How are they seeing the opportunity?
Yeah, I follow strategy, or formerly MicroStrategy, quite closely. I'm interested in what they're doing. I think it's great, but not for everybody. I think we're so early in the adoption of Bitcoin for corporations that we're going to see thousands of different ways that companies do this, and it's already evident. It's just I think strategy is probably they're the biggest holder and they get the most attention. But you've got a lot of other companies out there, like even Tesla or Block or GameStop, or a lot of private companies that you don't hear about who are adopting the asset as a treasury reserve asset. But like you said, we think of Bitcoin as greater than the sum of its parts, and it's a network, it's a technology, it's an asset, and it's money. And so companies can mine it and integrate it into their infrastructure. They can integrate it into their payments technology. They can settle transactions, and they can enjoy increasing purchasing power over time by holding it as an asset. So there's a lot of different ways that people can integrate it, and there's a lot of different examples in the corporate world all across that spectrum of companies doing things in a different way. And we'll continue to see innovation, and we'll continue to see different ways that it unfolds over time.
I'm with you on that one. I think it's quite exciting to see the various ways that people begin to get creative with it, right? And really think about what's the right approach for my particular business, given its industry, its particular circumstances. I really don't think it's going to be like a binary one size fits all approach to strategy, and I think that makes it extremely exciting to be part of that, and but also to observe what others do in that space.
Just to provide an example, somebody doing something in the payments front, and like Steak and Shake has been a very popular example this year, and they're not buying that I know of, but they are acquiring a strategic reserve of Bitcoin through just accepting it as payment. And now I think they're even talking about paying their employees in Bitcoin. So that's potentially a Bitcoin circular economy example, which is kind of new. So yeah, I mean, it's not just buy and hold. There's different models out there, and depending on your company, there's lots to choose from as far as how you integrate it.
Certainly. And I think the benefit of those actually using it for transactions as well, I think that really does help alleviate some of the perceived risks, at least, of Bitcoin becoming only going the way that gold did and really just becoming sequestered. And we only have kind of paper Bitcoin on top of that. And so it's great to see, success stories in terms of actually already integrating it into payment systems. Cool. So maybe a bit of a question about why now? So O21 you launched, if I'm not mistaken, earlier this year around Q1, Q2. So what was it in the kind of the macro landscape that made you kind of make the decision that now is the time to begin putting this new advisory model forth into the world?
I think broadly in the industry, it was a regulatory clarity for corporate adoption that happened at the end of 2024. And then you saw a wave of initial companies coming into the corporate adoption space. And I just looked out there and I said, well, there's really nobody. There are people who are focused on different parts of the Bitcoin economy, which could be like custody or exchange. It could be payments, insurance, tax. But there was nobody really looking across the different verticals and trying to piece together a strategy as a service for people. And so I just anticipated a need there, looking at what was happening, that we were just going to have this floodgates are open situation for corporate adoption, which hasn't really materialized yet, but that would be an increasing need going forward, and maybe a little bit early. I think more and more companies who are interested in it will seek outside help And that's where you come in, and we come in, and other people are trying to establish a similar model.
Yeah, I agree. I think similar to the Orange Wheel, I felt the same thing with the regulatory clarity, especially in the U.S. I think, which is sort of the harbinger of global perspectives when it comes to regulation, especially in financial markets. And I guess combined with, as you said, this kind of noticeable wave of public companies beginning to, this wave of announcements of public companies beginning to embark on similar strategies. So I felt like the timing was kind of ripe for beginning to provide this type of service.
Yeah,
and as you said,
oh, go ahead.
as you said, others, aren't failing to kind of fill that void, right? When you think of established incumbents, the mainstream consultancies, they're kind of reluctant to kind of provide such consulting services. So it provides great opportunity from my perspective.
Yeah, and clearly there are existing consultancies that could provide this type of expertise. What I've seen is that they would also probably talk to companies about the broader crypto ecosystem. They would focus on technology implementations of blockchain and or Web3 DeFi type stuff, or maybe even stable coins, and that's great. But that's not what I do. I focus on Bitcoin and Bitcoin only, and I think it's differentiated in the landscape, and that's part of the education as well. That's what we focus on, is perhaps trying to clear up some of the misconceptions that are out there. As people are curious, they understand the landscape, and we can send them on their way if they're interested in something else. We're happy to make those.
Yeah, I think the focus is really important. It's a bit of a double-edged sword, because given where, again, my experiences with business leaders is that they're skeptical to think about one digital asset. They sort of see it as like us being salespeople for one company or something, and they I think it's a natural human nature, especially for business leaders, to be a little bit like, let's talk about the bigger space. But of course, we understand why Bitcoin is different, what makes it unique, and what the underlying thesis is. So you're totally right. I get the sense there's just like that need for that educational piece, but kind of overcoming that initial skepticism of why are you guys so obsessed about just Bitcoin is a bit of a hurdle to get over, to get those first conversations.
Yeah, and I'm sure you've had these conversations too, but it's important for people to know who may be watching that Bitcoin's the only neutral commodity without an issuer, and everything else is a centralized business, and that's fine. They're technology solutions, and you can build upon them and use them and partner with them, that's fine. But Bitcoin is the only neutral money that's out there that provides everything that Bitcoin does, the decentralization, the immutability, and all of those things. So the characteristics of money are unique to Bitcoin in the space.
100% agree. 100% agree. And it's so simple once we kind of have kind of gone through that journey, right, to kind of understand that. And yet it's, as we all kind of experience it, it's quite difficult to orange pill anybody in our, closest friends and family in some cases, let alone, executives of corporations.
Yeah. And some of that, companies 10 years ago were looking at blockchain all over the place to try to find use cases and supply chain use cases or whatever it may have been. And it was kind of a lost decade if you look at what's happened since then, in my view. But that's fine. Companies will learn. They'll probably, crypto more broadly in the legislative landscape in the United States especially becomes more clear. Stablecoins was an example, but I guess there's more legislation on the way that kind of endorses additional crypto assets or technologies. They're probably going to dabble in those, and I think they'll learn long term that Bitcoin is the answer, and it may just take some time. Just like the individual journey is probably in your experience, you kind of have to figure that out on your own.
Certainly, I am kind of watching with half I don't know what the word is, Freudenschade maybe is maybe somewhat similar, somewhat correct term. These companies that are beginning to kind of build up other digital asset treasuries. I just know I'm quite confident these are going to be destined to fail. So I'm kind of, I wouldn't say looking forward, but I guess at least expecting some pretty big blowups with this case. I'm happy to be proven wrong if some of these companies can demonstrate that it does indeed make sense to capitalize a company on Solana or Ethereum. But right now, from my perspective, coming back to the fundamental properties of what makes something a money versus a technology, I think these things are going to be destined to be bubbles, I guess, at the end of the day.
I tend to agree with you.
Yeah. Okay, so you've recently published this really great article. I guess I call it an article or maybe a playbook. I don't know what the best terminology is. You can let me know. But basically it talks about sound money and how to integrate Bitcoin into, to develop a Bitcoin-powered business. And from my perspective, I think this is a pretty cool approach to really combining some of the classic consulting frameworks and thinking about strategy as a more general perspective of corporate strategy, but now taking kind of Bitcoin lens and kind of really merging those two in in something that's suitable for business leaders. So I think it's a great document that you put together. And I'll make sure we kind of share the link in the description at the end of this and details on how people can access it. But you talk in this document about the fiat fog, and I'd like to understand if you can unpack a little bit more about the misaligned incentives in our current kind of fiat-based monetary system and how that kind of the implications that has on how corporations run their business.
Yeah, and certainly I'll answer your question. Just up front, I want to just make it clear that I lost my train of thought. Sorry, what was I going to say?
Take your time. We will edit this, so take as much time as you like.
Yeah. Gosh, I had it while you were speaking. Sorry, I remember. So yeah, I think it's important to say before I answer your question that the vision of corporate adoption that I have is not just a pure focus on Bitcoin accumulation for its own sake. I think that companies of all kinds should continue to exist to focus on their craft and produce goods and services that society needs, and do so with relentless focus, high quality, treat their customers well, and have a runway that sound money can enable. And so that's really the underlying thesis. Is companies had that once upon a time. Gold and cash were equivalent in history. Cash represented a claim on physical underlying sound money, and then for the last 100 years there's been a deliberate severing of that relationship. And if you think about today, in 2025, anybody who actually saw a real kind of gold standard is at least 72 years old now, and maybe still in the workforce, but anybody who's probably in leadership or who works at a company today never experienced money on a gold standard, or even something halfway on a gold standard before 1971. And that used to just be the default setting of monetary policy, and the economy was a sound money standard. And we think that there's a lot of symptoms if you look out at the choices that corporations make. And I will generalize. I'll try not to be too much of a doomer about it, because I do think that there's a lot good going on in the world, that we have a lot of choice, and people are generally probably better off than they ever have been. But there's a lot of deterioration in what you see maybe with the quality of things, the quality of your house, or the quality of the things that you find in the grocery store. The price of things keep going up, but the size of things keeps going down. It's probably familiar to people. And so, like, if you look at the price of a can of Campbell's tomato soup, a long-term chart, this is one of my favorite charts, for 100 years it cost 10 cents. And then after 1971, it looks like the NVIDIA chart. And that's just one small example, but it was 10 cents for 100 years. Like, that's price stability, that's increasing purchasing power. And what does that mean for a person? It means that they can be compensated for the work that they're doing in the world in a money that preserves its purchasing power, and not have to risk it in a secondary market, or an equity, or in a stock, or in a casino to try to save twice. And extrapolating that to businesses were the same way, right? If you have raw materials or inputs into your business, they're probably getting more and more expensive these days, and that puts a strain on ultimately your in performance. And so then you start to focus more short term on nominal returns, and maybe your business model becomes a little bit more, I guess, diluted, and you make choices maybe at the expense of your customers instead of in the best interest of your customers, and you kind of see that playing out. And anecdotally, maybe we're familiar with some of those examples. So this is why we decided that a sound money framework for business is a good way to think about not just accumulating sound money in your treasury, but how you can actually orient your business towards providing value for customers, value for society, for your employees, and a return to high quality goods and services long term. So that's the inspiration behind the framework.
Love it. No, it's great. It's great that you kind of like provide the foundations for the thesis, and ultimately coming down, as you said, to sound money versus fiat money, which the supply can be manipulated, and then stepping us through what that implies for individuals, and then also kind of playing that through to corporations. And something that kind of came to me a little bit as maybe a somewhat suitable analogy is the way I sort of think about it is currently in a lot of corporations, the textbook corporate finance would say if you have excess cash, you will tend to want to pay that out as dividends unless you can exceed the cost of capital through some sort of investments in expansions or acquisitions or so forth. And that really, I find, makes a company more fragile, not having that buffer of additional cash or wealth to stomach cyclicity or volatility within their business environment. I sort of see it as like, this a bit of analogy in the supply chain world where you have this like just in time, don't hold any inventory, don't hold any excess working capital, try to minimize that to really maximize your return on invested capital, but that creates, again, like fragilities in your system that now, if anything goes wrong in your supply chain, you now cease to be able to operate. And I think we witnessed that a lot with, from a practical stance in the COVID-19 pandemic. And so now
Yep.
there's a more of a, looking at resilience rather than optimization. So I sort of see it similar with how excess liquidity is managed within corporations as well.
Exactly right. I mean, it's companies are almost like a pass-through just-in-time model today, just perfectly stated by you. And we don't advocate for 100% one or the other. Like I think you can do both. And you see companies do both today. They're holding cash on their balance sheet. They're not returning everything to shareholders via dividends or buybacks. They're holding some because maybe they want to pursue an accretive M&A deal, or because there may be a risk around the corner that they don't foresee, a black swan of some type. But the problem is today they're holding in cash or cash equivalents that are melting faster than the stated government statistic would tell you. And there's maybe a different way if you're going to hold something long term.
Totally get it. Yeah, and it's kind of interesting, right? Like, I guess that kind of, and I'm totally with you in the sense that when people think about holding Bitcoin as a reserve asset, it doesn't necessarily mean, especially on day one, that it's your primary reserve asset. That it could just be a 5% allocation, 10% allocation to really, I guess, get familiarized, first of all, but also maybe really find that right balance between having liquidity, because Bitcoin itself, as measured in US dollars, is still quite volatile as well, right? So having that kind of liquidity ability coupled with the long-term perspective of the Bitcoin thesis that it will indeed significantly outperform fiat debasement.
And there are examples. Like, so just to provide an example, somebody who's holding Bitcoin just partially is Tesla. And, they bought famously, I think, what was it, 2022, 2021?
I think 21.
21. And they bought like 1.5 billion, and then they sold probably a billion. But they've held on to it since then. And the CAGR on that investment for them is greater than 20% per year, just doing nothing. And it's not their primary asset. And they're clearly building big things over there, and they're focused on their craft. And so this kind of gets back to what I was saying is we think businesses should still exist and still provide goods and services. People need things, but it can be something that is on your balance sheet long term that provides you more resiliency and more runway to and really focus on delivering those things that are going to make the biggest difference for your company.
Totally agree. And I think that, in that line of thinking, it ultimately becomes a competitive advantage if your competitors are not doing that, right? So as you said, in the case where there is sort of a black swan event and other competitors have kind of liquidated their cash, paid it all back, done share buybacks, not really retained much, they risk going into potentially a default circumstance, or at least having to kind of rely on higher costs of capital to kind of access more liquidity. Whereas the company that is saved in Bitcoin has built a bit of a buffer and savings for itself, is able to kind of weather that storm better and come out the other side in an advantageous circumstance.
Right. Yep.
Really cool. So if we kind of talk about some of the executives that you've worked with, what do you see in the kind of day-to-day that shows the system itself is the bottleneck?
I think by and large, executives want to do the right thing, and they're incentivized, maybe tightly coupled with their company and their company's stock price, which is supposed to incentivize long-term thinking, right? It's supposed to incentivize long-term thinking because you're an owner in your company and you benefit when the company does well long-term. But as we've seen, I think there's a lot of pressure on short-term results, quarterly earnings, but not just quarterly earnings, but hyping up the future expectation of cash flows in your latest quarterly call. I've seen more and more of that over the last couple of years. I don't know how you feel, but if there's not even just like a massive beat, if there's just a small miss or even a minor beat, coupled with just a small kind of degradation of your forward expectations, the market is severely penalizing the most valuable companies in the world today with their stock price. And so, I think executives today are cognizant of that. I think they want to do the right thing, but they're balancing almost this impossible Rubik's Cube of things to do on a daily basis to execute and deliver and grow and beat monetary debasement. They may not even realize that that's what they're trying to do. But yeah, I mean, I don't know if that answers your question, but
yeah, I believe it does. It's kind of coming down to more like the executives themselves, the circumstances they find themselves in, the investment opportunities they have, the pressure from the markets. I totally see it. I'd add one more thing from my perspective a little bit is coming back to the incentives. You do set the sense that executive bonuses are increasingly based on share price. And again, it's supposed to align incentives with the owners, but it can cause them to say, okay, I'm going to be in this position for 4 or 5 years till my options vest. What can I do that can generate the most share price increase?
Yep.
And I guess it's a combination of, I think, as you brought up, the markets for better or worse. And I think it does come down to the fiat mindset that investors are in as well. It's all about growth, right? If you want to beat that fiat debasement of 7, 8, 9% per year, it's hard to justify investing in a value company. But it's about kind of buying into a company that has a really compelling growth story. And then I think the second thing is that executives can kind of boost the stock price through share buyback. So if you have extra cash, what's the optimal thing you can do with it? Okay, buy back shares to boost the share price and sell a compelling long-term growth narrative. And the companies that are just kind of, as you said, just focusing on their craft, maybe in a boring business, boring industry, but one that can be very profitable, right. They are sort of, there's not much attention or love from investors in something that's just one of these relatively standard businesses that are still delivering value to society and have great opportunities potentially over the long term, but maybe not drawing in that attention in the short term.
Yeah, and people, investors or analysts or the market, they're used to looking at the income statement, and they look at revenues, cash flows, and earnings, and they do evaluate and care about the balance sheet, but they're not used to having growth actually come from the balance sheet, like in US dollar terms. And that's a new thing that people are going to have to get their minds around. Because before it was just either dollars that are earning a few percent on US treasuries versus something that's compounding at potentially 30 to 50% per year in US dollar terms. That's not usual. That's what I mean when I say companies can have more runway to make good decisions and focus on their customers and deliver high quality products and services.
I think that's a pretty good segue into my next question, which has to do with what it means to kind of align to Bitcoin as sort of the North Star. And part of that in my mind is Bitcoin is a hurdle rate for capital allocation. So as you kind of said, if you can kind of have the opportunity to generate 30-ish, maybe more, 30 to 40% CAGR from a balance sheet asset, how does that change how companies think about prioritizing investments, whether it be organic or inorganic within their core business?
Yeah, so the hurdle rate, as you said, is just kind of traditionally the rate at which you need to outperform in order to make the investment worthwhile. I think most people use their weighted average cost of capital for that. But if you're an individual, maybe you're looking at something like, well, I could just buy an index fund in the S&P 500, and that's what 8 to 10% per year, maybe 8 to 10 to 12 more recently. And so you have options as to how you invest your dollar, and it should beat some rate of just whatever the easiest, lowest friction thing is that you need to do. And now that Bitcoin exists and it's been designated a commodity and it's this neutral money that companies can hold on a balance sheet, it needs to be evaluated as an opportunity cost. And so I think there's a lot of discussion in the community now as treating Bitcoin as this really hard hurdle rate. If you can't return 20, 30, 40% per year on your business, then you need to buy Bitcoin instead. And that makes total logical sense. I think where there's some friction is that maybe there's some enabling things, and you have a core business initiative, a strategic initiative that you think is going to actually outperform that long term, if it's the next big thing. And there may be enabling things that you have to do to support that from a project perspective and execution perspective, and maybe every individual thing doesn't return that. And so there's nuance there. But generally speaking, the opportunity cost now that Bitcoin exists, and you can hold it on your balance sheet, like you need to be looking and evaluating Bitcoin as the alternative to some other investment. And so that's what we mean when we say, when you're evaluating your strategic priorities, like you're going through this process that we describe in our framework, and you've said, okay, this is what we do well, this is where we want to improve, this is where we see the competitive landscape. These are the 3 to 5 things that we're going to go chase as a company. Like, you need to evaluate those versus Bitcoin as the hurdle rate, because it may be more simple and straightforward to hold Bitcoin on your balance sheet for 6 years, and you'll outperform everything that you want to do. And again, like I said earlier, it's not all or nothing. Companies hold excess cash, they evaluate M&A activity, they pay out a dividend, or they do share buybacks. And so you can start to do this in lieu of some of those activities, because realistically, I do know that stock prices are somewhat contingent upon right now this model of returning cash to shareholders. And the second that starts to change, then companies can have a negative near-term impact, as we've seen with some of the companies that have done this. So it goes both directions, and I'm not advocating all or nothing. Like, now that Bitcoin exists, and it's like BlackRock's most popular ETF in the history of ETFs is a Bitcoin ETF, and Vanguard is seriously taking it, is allowing their customers to buy it, and Bank of America is allocating 1 to 4% in your individual portfolios to it. Like, it's not a fringe asset anymore. You need to start taking it seriously.
Totally agree. Yeah, and I think it's I mean, really great stuff there, right? And I feel like there's the one aspect I've gotten the most resistance in the conversations I've had with business leaders is like they might recognize it as an asset, and they can say, okay, we can look at the historical data. 30 to 50% CAGR. Maybe they even buy into the idea of, yeah, we understand the underlying thesis as to why that's expected to continue in the future, and we're not just at the top of the bubble. But where I see resistance is leaders then say, well, I'm not an investment fund. My shareholders don't invest in me, so I can invest in Bitcoin. If they want to invest in Bitcoin, I give the money back and they do it themselves. I don't want to run up against that challenge. And as you said, I think some companies that do begin putting the balance sheet risk losing the investors that are buying the stock because they value it based on the dividends, and so they get scared away. So there'd be a bit of a rotation, I would say, of investors. For the ones who get it would come in, and the ones who don't get it might move out. But at least for now, there's probably more moving out than moving in, just because the percentage of awareness of this thesis is still relatively low. So any reflections on that aspect?
Yeah, I want to go back to what I said earlier. Right now, it's a two-step process. You have to earn money from your customers, from your business, and then you have to choose how to save it. Before, on a sound money standard where money was tied to gold, that was the default setting of the economy. So what we're basically saying is we're trying to move back to that one-step process of the money is sound, right? And Bitcoin is money. So I understand that it's a very popular argument that we're holding cash, and if we don't have anything better to do with it, we can just return it to shareholders. And yes, you can continue to do that in part, but to the extent that you want to plan for the long term and have a resilient business, and maybe you can admit that you don't know everything about what's going to happen a year or 5 years down the line in terms of external threats to your business, that you may want to have capital. You may want to be capitalized on an asset that's sound.
Love it. Yeah, totally agree. I think that's an important argument to kind of take to companies who might feel that way about, and it certainly is a trade-off, right? There can be that short-term damage to the share price as you get the kind of investors that maybe are scared off by the thesis if it's not effectively communicated. But over the long term, you're setting yourself up for to be in a stronger position, to be a more resilient position vis-a-vis your competitors. Love it. And I think the other thing you brought up that I liked a lot was, this idea of, if you do say, okay, we buy into Bitcoin being 35% CAGR, and maybe nothing in our inventory of investment opportunities beats that. I think that's a pretty high bar to get over, of course, right? So most companies don't have the benefit of having such investment opportunities. But I think you're right about it saying, okay, that's one analysis and one lens to think about how to allocate capital. But of course, it doesn't mean that companies should just stop investing in their core business just because Bitcoin exists. In some cases, maybe they should, right? But I do think there's also this idea of, okay, long-term continuity. Maybe that does mean we still allocate capital to keep our manufacturing equipment going, keeping our core business alive, because that itself, is kind of also something that's essential to be able to have the optionality for longer term resilience and for continuing to deliver the services that ultimately will enable the accumulation of more Bitcoin.
Yeah, and if you think about, just the really long term, if and when Bitcoin becomes like just day-to-day money, and there's this deflationary environment, as we've seen in like TV prices, right? TVs, for some reason, are the only thing that actually go down in price. But if that extends to everything, because all the productivity gains in the world are accruing to sound money and your purchasing power continues to increase, we have a principle in our framework called value for value. And that explicitly says that as a business, you essentially need to provide something that's either so necessary or so compelling and so good that people will be willing to separate themselves from their Bitcoin for you or your product. And what does that do to competition? What does that do to the competitive landscape for businesses? They have to ruthlessly compete on value, on quality. And that's why I'm so excited about this, is because I think long term it's going to really lead to this renaissance of high quality products and services that compete on value.
Totally agree. I think that's one of the mainstream arguments against, let's say, from orthodox economists. They would say, okay, if you have something like gold, people hoard it, they don't spend it. And I think that's an oversimplification. I think people will spend less on things that are wasteful. I think people still have to spend on things that they need, desire, want, but there won't be this kind of excessive spending on things they don't really need and don't really want.
Right.
So this kind of overconsumption in society, I think, will decrease, and we will, I totally agree with you, move to higher quality products for less price as measured in Bitcoin, of course. Okay, so let's talk about the Orange Horizon model. So it'd be great if you can maybe you kind of break this framework down into 4 phases. So maybe just to kind of explain this 4-phase model, the Orange Horizon model for the listeners.
Sure. Yeah. So the overall document, or the overall framework, is called the Sound Strategy Framework. There's three components to it. There's the principles. So there's 12 principles. Then there's the Orange Horizon model. And then lastly, there's this tactical budgeting approach we call Bitcoin-based budgeting. The Orange Horizon model is probably something similar to, you may be familiar with different types of corporate strategic planning frameworks or models. It's a 4-step process that goes through essentially understanding your own state, like your own current situation and the external market environment or the external landscape, and distilling that into insights. The second step is synthesizing that and taking the realm of possible initiatives that you could go do and you could go chase with your company, and then prioritizing those down into a manageable list that's hyper-focused on the thing that will create the most return for your company. The third step is work, which is actually executing the initiatives and measuring the results. And then lastly is adjustment. You may not get it right the first time, and you may need to tweak based on the data that you're seeing. And so it's just a cyclical model that provides feedback and that uses Bitcoin as the North Star and the hurdle rate to evaluate and hyper prioritize what it is that you want to go do.
That makes really good sense. I think making sure that things are always iterative on the right kind of frequency of feedback is important. And of course, I think smaller businesses can be more agile and get that feedback loop going a bit faster. Larger companies, a bit more process driven, a bit more inertia. And so kind of really finding that balance to be able to kind of execute, but also iterate relatively rapidly is a key success factor in many industries.
Absolutely. And I want to call out, like, this is not meant to be heavyweight. It's meant to be quick. This is all grounded in the Bitcoin ethos, which is like speed matters. So apply the 80-20 rule, like get the right people in the room with the right sponsorship, get the right feedback, and then you probably have some good intuition about your business combined with some external views. And then from then, it's really about the prioritization. It's about having the intuition to be right about your choice and then executing flawlessly and seamlessly with kind of an organization that's pointed in the same direction. So it's not meant to be heavyweight. Small companies can use it, large companies can use it, and the smaller you are, probably the quicker you can do it.
So what do you find to be the kind of, generally speaking, appropriate frequency for adjustment to kind of reevaluate? Again, is it kind of on a quarterly basis or monthly, or what do you find works the most efficiently?
So I think, the Orange Horizon model is really meant to be kind of the 2 to 3 year horizon. So it's not super long term. I think, there's less and less ability to predict 5 years out anymore.
Certainly, yeah.
So you kind of need to have some principled view of how you think the world's going to play out, though, really long term, but directionally be right about that. But kind of the 2 to 3 year time horizon is what I would call like your strategic initiatives. And then, so the adjustment phase, I think you need to let things play out. So maybe like twice a year, you come back and look at your metrics, look at your data, and to see how things are playing out. But as we know, like with Bitcoin's volatility, like the world is volatile, and you kind of need to let things play out for a while before you have a really strong view as to how something plays out. Now, this is something that a lot of companies I see get trapped in is, you have individuals that come in to lead organizations, and they kind of have this empire building mindset, and they have their own performance, their own compensation to worry about, and they want to layer on the latest strategic initiative because you have a new person in the chair, and then the next person does the same thing 6 months to a year later, and you're constantly in this churn of change in your organization. Now, back to the incentives, right? The incentives to kind of drive that, and there may be wins that result, but I think generally more long-term orientation is probably better.
No, really good point. I've also worked in larger companies, and that's certainly seen that happen, right? Where you kind of have a change at the top, and then it kind of makes sense as human nature to kind of put your stamp on things, to kind of set the course in a direction that you think makes sense. But of course, the bigger the organization, the more layers and the more risk at any given time there's somebody readapting. So keeping that kind of consistency. And I think also, as you said, having the conviction to kind of let things play out and not leading into some sort of reactionary base where you say, okay, we made this decision. Bitcoin's price is now down after 1 month of some allocation. Let's pull the brakes and recorrect. Or it might not even be Bitcoin's price. It could be an investment in something else that's core to the business. And I think being able to say, let's try to ignore and not get too emotional about short-term ism and actually give some time for things to kind of simmer, I guess, and set.
Yeah, and we've seen a lot of examples, I think, in the corporate world of big bets or strategic initiatives that may have been directionally right based on everything that you knew at the time, but for whatever reason weren't executed well or just didn't happen. And like this week, you saw with Ford, like and the write down of the 50 Lightning investment, like 5-10 years ago. like probably everything that you were looking at on a sheet of paper told you that EVs are the next thing. Everybody needs to have a strategy, and you need to bet big on it. And I'm not I'm not commenting on EVs or otherwise in terms of their actual merits. I'm saying that you could be directionally right about your strategy and the trend, but it still doesn't pay off for one reason or another. So it's tricky, and it takes a lot to get through these strategic initiatives and then ultimately be right.
Totally agree with that. Yeah. So if we kind of look at like what we're seeing in terms of signals happening in the market today, and of course, there's been a little bit of a lull in the enthusiasm towards the Bitcoin treasury companies, the pure plays, the valuations of those companies. We saw in Q2, they're moving to very high multiples of their Bitcoin asset value. They've now come down to be trading, most of them, if not all of them, are less than their Bitcoin asset value. And I think there's been sort of a halo effect of that across all Bitcoin corporate adoption. And I think Bitcoin's price being in a bit of a lull is certainly probably a contributing factor to that. But despite that, I mean, are there signals that you're seeing in the market today that business leaders are, despite, let's say, the general media attention and general sentiment towards the asset class, that there is companies becoming curious, business leaders becoming curious, wanting more information about Bitcoin, showing interest in the general trend at large? Yeah. What are you seeing in the market today?
Yeah, I think the most obvious example today of adoption that people can see in their normal everyday news is just like today, Hut 8 announced a strategic partnership with Google, and you've seen other Bitcoin miners announce similar deals with hyperscalers. I forget which one is which, but Iron and Cypher announcing things with Microsoft and AWS and Amazon. And so you see the hyperscalers after this capability of compute intensive requirements, power, land, real estate, and data center expertise that's been unique to Bitcoin for a while, but now is sprawling out into the AI and HPC world. And this kind of gets at, there's operational problems, there's capabilities that Bitcoin and Bitcoin companies have, which is providing a value proposition beyond just the number go up technology and the long-term savings technology. And mining is another example. So I talk to a lot of people here in Texas, a lot of oil and gas operators, and maybe they're royalty owners or other people who say, well, I've got the Waha gas price out in the Permian is negative, and I've got this natural gas that I don't know what to do with. And well, you can place an on-site, Bitcoin mining operation with a generator and an internet connection, and then all of a sudden you can turn negative natural gas prices into $12 per MCF. So it solves these problems, and this is where I see adoption organically occurring, is places where there's this intersection of a need in energy or in compute or in wasted energy, and that's where I think there's a lot more organic adoption happening. And then I think where people don't see it, as far as the treasury side, is just in private companies who, maybe a small business like a local bakery or somebody who puts epoxy floors in your garage or whatever, and they have excess cash flow. And instead of buying Airbnbs, now they're looking at adopting a Bitcoin strategic reserve for themselves or their family. And so I think there's a lot more of that happening than people realize.
Yeah, certainly. I think that's great to talk about these things, right? Because there's the kind of the big headlines and the attention, in the pure play treasury space, and I think there's good reason for that because these companies are massive. There's been a huge amount of capital flowing in, but I guess I tend to agree that I think there's like this general mega trend of adoption happening below the surface that just people aren't aware of. It's not in the headlines. The private companies aren't making disclosures around this. And I think, as you and I know, that Bitcoin's a bit of a one-way street, right? It's kind of like, very rarely do people kind of begin saving in Bitcoin and then move out of it, right? So I think there's that kind of foundational layer is just continuing to grow in up and down market cycles. And
I forgot to mention this earlier, but like just contextually, like you're familiar with this chart of the price of the median US house in dollars versus Bitcoin. Mm-hmm. This is my favorite thing to put up on the screen. It's like in the last 10 years, the price of the US median house is gone up by 2x, or it's doubled. But in Bitcoin terms, if you're actually using Bitcoin as a unit of account, it's gone down by 1,000x, like 99%. So if you're saving in Bitcoin as an individual, you intuitively understand that on a 10-year time horizon, a house could go down by 99% in terms of its price. And that doesn't stop it at individuals. That's the same thing for businesses. If you have a CapEx outlay that you expect in 10 years, well, why don't you buy some Bitcoin now and wait 10 years? It'll be 99% cheaper in the future. So anyway, I just like to ground things in tangible examples.
Totally like that. Yeah, that's great. Actually, again, making those analogies from kind of like individual to corporations, I think it's really valuable to kind of bring those examples and insights to bear. Right? And of course, we'll leave it aside for now. We don't have to dig into it, but the constant resistance is that people, if they don't understand the underlying thesis of why Bitcoin will continue to go up in value, they often say, okay, we're at the top now. It can't continue to go up. It's not going to go from 1 trillion to 10 trillion. And that can be a bit of a hurdle to get over.
Yeah, and I guess we don't have to go down that rabbit hole, but you should ask yourself, do you expect the performance to continue? And then you have to kind of look at the signpost from this year and recent history to evaluate whether or not you think that's the case. And I would just point to, the interest on the U.S. deficit, or the interest on the U.S. debt is now greater than the defense budget, and the abject failure of what I would say is probably the most coordinated, aligned governmental body in history coming in to attack cost inefficiencies, but failing after a few months. And that's a huge signpost to me, is that you could probably expect the money printing to continue indefinitely.
Nothing stops this train, as Lynn Nolan has coined, right? It's so true. And Elon Musk has bought into that now too, right? So it's becoming a more widespread perspective. I shouldn't be laughing because it's also a bit sad, right? But that's the reality.
Yes. Right.
Okay, in our last couple of minutes, I have a couple of rapid fire questions. So just quick, punchy responses on these four questions for you before we go into the close. What's something most people in the C-suite get dead wrong about digital transformation?
I think probably the biggest thing is that it's treated as a program of work that has a beginning and an end. And okay, we executed this slate of projects. We're digitally transformed. Let's go on to the next thing. I think you need to bake things into your culture. You need to permeate the behaviors that you want into the day-to-day, and that's how you truly transform.
Like it. Love it. Number 2, what's a corporate sacred cow that you think needs killing?
We already talked about this one. I think it's stock buybacks. So maybe not in totality, but at least a portion of your excess cash or stock buybacks, I think, should start to go to Bitcoin.
Love it. And I guess I'll just add a little 2 cents on that one. But I think in order for that to be killed, I think we need like executive reward compensation to also kind of fundamentally change to prevent that incentive.
Yes, agree.
Yeah. Okay, third one. 3 mega trends: ESG, AI, and Bitcoin. Rank them in terms of long-term impact.
I think Bitcoin and AI are two sides of the same coin. If you look at all of so what's happening with AI? Why is it such a big big hype right now? And it's really like people are in a race for the future of all future productivity. They're in a race for the future of all creativity and invention. And how much is that worth? But that also means potentially massive automation, reduction of jobs and workforce as people become displaced. But then that's where Bitcoin comes in as something that is grounded in proof of work and in compute power. It's something that can't be printed and something that will preserve its purchasing power long term, and potentially is a fix for some of these other behaviors that we talked about. So I think it's Bitcoin and then AI, but largely two sides of the same coin. And then ESG is still important, but you can just go ahead and kick that one out. That's a long conversation. Maybe we can come back for a whole separate podcast on that topic.
Let's do it.
I think companies should be truly focused on the original intent of strong corporate stewardship and environmental stewardship, but what ESG has become and what it became is not in the best interests of society or shareholders or companies or long-term prosperity. And so that one can go way down the list.
Okay, awesome. Let's have another meeting where we go deeper into that in our follow-up sometime next year. Okay, last one. What's one financial KPI that you think will be obsolete 5 years from now?
Jeez, I don't think I prepared for this one.
Okay.
I don't know. Can I pass?
Pass. We'll take it up. We'll take it up at the next one. That's all right. Okay. So, last question then. If you could give every Fortune 500 CEO one line of advice that could prepare them for the next decade, what would it be?
Buy Bitcoin.
Nice and simple. Perfect. All right. So, Matt, it's been a fantastic conversation. Really love, having, these types of sparring sessions with a like-minded individual who's kind of in a very similar, niche, I would say, for now. But a very exciting one. And of course, on the other side of the pond, the general themes I think are very similar when we think about a corporate adoption of Bitcoin and Bitcoin strategies for businesses. So it's been really great. We've covered a lot of territory. For those who might want to learn more about One Solutions or to get in touch with you directly, what's the best way for them to reach out?
So you can find us online at o21solutions.com. I'm also on X. The handle is Odyssey21S, and I'm on LinkedIn, which for the business world probably more accessible there. So yeah, that's where you can find me.
Fantastic. I'll make sure I put all the contact information in the description of the video. I wish you a really happy Merry Christmas, Happy New Year. Do we have any big plans for the holiday season down in Texas?
No, this is the time of year we always just spend locally with our family. Well, they're all in town locally. So, we're fortunate in that regard. So yeah, kind of getting geared up for conference season next year, but yeah, it's a good time to rest.
Fantastic. Well, enjoy the break, enjoy the holidays, and look forward to catching up with you again in 2026.
All right, Ted, thanks for having me on. I appreciate it.